Taxation of unincorporated partnerships as taxable persons. Overview of the application for partnership-level taxation. In certain circumstances, the partners within an unincorporated partnership can apply to have the partnership treated as a taxable person under the corporate tax regime. This application, once accepted, allows the partnership to be taxed at the partnership level, rather than individually, with the resulting taxable income calculated and assessed on the partnership itself, instead of allocating tax responsibilities to each partner individually. The process begins when the partners collectively submit a request to the Federal Tax Authority, FTA. The application can be effective from the commencement of the tax period in which the application is made, or, alternatively, from the start of a future tax period or from any other specific date that the FTA deems appropriate. This flexibility allows the partnership to align its tax election with its business cycle and financial reporting. Key effects of partnership-level taxation on the unincorporated partnership. Once the application for partnership-level taxation is approved by the FTA, the taxable income of the partnership will no longer be calculated separately for each partner. Instead, the partnership itself will be treated as a taxable person, meaning that it will be responsible for determining and reporting its own corporate tax obligations. This change has several important consequences. 1. Tax calculation at the partnership level. Under this new arrangement, the partnership itself will calculate its taxable income based on the total income and expenses of the partnership as a whole. This eliminates the need for individual partners to separately calculate and report their share of the partnership's income and expenses for tax purposes. The partnership must determine the taxable income in accordance with the corporate tax laws, including taking into account any deductible expenses, income recognition rules, and any other tax liabilities that apply to the business activities carried out by the partnership. By applying this treatment, the FTA treats the partnership as a distinct taxable entity, separate from the individual partners, even though it is still not a separate legal entity in the traditional sense. This structure provides a more straightforward means of taxation for partnerships that operate with multiple partners. 2. Joint and several liability. Despite the partnership becoming a taxable person and taking on the responsibility of calculating and reporting its tax obligations, all partners in the unincorporated partnership remain jointly and severally liable for the corporate tax payable for all tax periods in which they were partners. This means that, in the event of a tax shortfall, the FTA can pursue any or all of the partners for the full amount of the tax due. This liability is meant to ensure that all partners are accountable for meeting the tax obligations of the partnership, irrespective of the fact that the tax calculation itself is now handled at the partnership level. The FTA may choose to pursue one or more partners for the payment of taxes due, which underscores the importance of each partner's responsibility in ensuring that the partnership meets its tax obligations. 3. Appointment of a responsible partner. As part of the application process, the partnership must designate a single partner to act as the responsible partner. This individual will bear the primary responsibility for ensuring that the partnership complies with its corporate tax obligations. The responsible partner will handle the submission of the partnership's tax returns, maintain records related to the partnership's tax matters, and ensure that any tax payments owed by the partnership are made promptly. This centralization of responsibility simplifies compliance and helps streamline the tax process for the partnership and the FTA. The responsible partner will also be expected to liaise with the FTA for any issues relating to tax audits, assessments, or disputes, and will need to ensure that the partnership complies with all deadlines related to tax filings and payments. 4. Implications for individual partners. Although the partnership itself is now treated as a taxable person, it is important to note that the individual partners still have ongoing obligations under the corporate tax regime. Each partner remains jointly responsible for any corporate tax payable by the partnership, and the FTA can hold them liable for the tax obligations incurred during the period in which they were involved in the partnership. Additionally, the individual partners must ensure that they continue to comply with the broader corporate tax laws applicable to them, especially in relation to their personal tax matters, income from other sources, or any other businesses or income activities they may engage in outside of the partnership. 5. Effect on partnership income. Since the partnership is now considered a taxable person, the income, profits, and gains generated by the partnership are considered as belonging to the partnership itself. The partners will no longer be required to directly allocate their share of the partnership's income or profits to their individual tax filings. Instead, all income and expenses will be recognized and taxed at the partnership level. The income of the partnership, after tax, will be distributed to the individual partners in accordance with the partnership agreement. These distributions will not be subject to corporate tax again, as they are essentially post-tax earnings that have already been taxed at the partnership level. 6. Long-term commitment. Once the application to treat the partnership as a taxable person has been approved by the FTA, the decision is typically irrevocable, except under special circumstances. This means that the partnership will remain taxed at the partnership level for future tax periods unless there is a valid and approved reason for reversing the decision. Partners should, therefore, carefully consider the long-term implications of this election before submitting the application. Any changes to the partnership structure, partners, or business activities could impact the partnership's tax position and require consultation with the FTA for guidance on how best to proceed. For more details, contact us.